Have you ever wondered why you should transfer your real estate to an LLC? Have you ever wanted to know how to transfer your property to an LLC? Have you ever wondered what the risks are with transferring your properties to an LLC? If so, you're in the right place. Stay tuned for the answers to these questions and many more.
Hi, I'm William Dolan, and this is Esquire Advice, where we explain complicated and lucrative real estate and business topics. Remember, we are not forming a lawyer-client relationship by way of this channel. Always consult your local attorney before taking any action. With that said, grab a pencil and a piece of paper and get ready to learn.
Welcome to our episode on transferring property to an LLC. We're going to cover this topic key concept style. But before we do that, if you like this video, please hit the like button. And if you think you might want to see more videos on real estate or LLC topics, please kindly hit the subscribe button too. One more note before we dive in. The last three concepts I am going to cover are the least known or least understood issues with respect to this topic. So either watch this video to the end or fast forward to the end to watch the last three if you feel like you understand these early concepts. With that out of the way, our first key concept is the purpose of transferring a property into an LLC. If you own a piece of real estate in your name personally, you are at risk of getting sued personally, and therefore your personal assets are at risk. Insurance helps, but it is not a cure-all. Insurance will not prevent you from being sued, and it does not cover all claims, which is why a good risk strategy will incorporate both insurance and limitation of liability with an LLC. Mechanically, if you are sued and lose the lawsuit, the plaintiff will get a judgment against you. That judgment will allow the plaintiff, who is now a judgment creditor, to execute on that judgment to have it satisfied. That means the judgment creditor can get to your property. Judgments are generally automatic liens against real estate with a few limited exceptions, which means our plaintiff judgment creditor could foreclose against the real estate that you own, attach your wages, sweep your bank accounts, have your motor vehicles sold at auction, and the like. To be thorough, not all states allow every collection method, but you understand what I'm getting at. This also applies to an LLC if the LLC gets sued, which is why you always want to own each piece of real estate in a separate LLC. That helps to further reduce the assets that are in play for any potential plaintiff. Also, if you have a partner, you should consider a holding company structure. That would help save you a lot of money in income tax preparation costs and help you obtain maximum leverage too. Check out our video on holding companies for more information on that topic. The second key concept is paperwork. In some areas like the city or county of Philadelphia, you can simply record a deed. However, in other counties like Newcastle County, Delaware, there are multiple transfer tax affidavits and supplemental documents that must be filed too. With an engagement letter and a survey or title insurance waiver form, there ends up being 7 or 8 different documents that the attorney in Delaware needs to draft to effect the transfer. That is a lot more paperwork than just a deed. The third key concept is accuracy. The name of the grantor must be exactly correct on the deed, or it will be outside the chain of title and not do anything. The name of the LLC, or here our grantee, must be precise too. I have seen many transactions where an S at the end of a word is omitted. Maybe the name of the company is Real Estate Investments LLC, but the deed reads Real Estate Investment LLC. With a mistake like this could be a big problem because either the company that owns the property doesn't exist or it's owned by someone else. Sometimes this can be remedied rather painlessly, but sometimes it turns into a big mess. You also need to be sure that the legal description is correct. The fourth key concept is transfer taxes. Many people are surprised to find out that transfer taxes are triggered much more frequently than they expect. For example, if you own a property 100% in your individual capacity and you transfer it to an LLC that you own 100%, that transfer is exempt from transfer tax in Delaware, but not in Pennsylvania. Even in Delaware, if you're transferring from you to an LLC owned by you and your girlfriend or someone else who is not on the exempt list, 50% of that transfer will be subject to transfer tax. And in some counties, even in Delaware, you may have to do multiple deeds to avoid the 50% of the transfer tax that is potentially exempt. And if the deed package requires 7 to 8 documents, you could be looking at an attorney drafting 15 to 20 documents to do your simple deed transfer. The fifth key concept is title insurance. First, let's be clear on what title insurance is and the value it plays in the process. When a title company or attorney helps you purchase a property, you're usually issued an owner's title insurance policy because they generally require you to purchase one, and for very good reason. The title company or attorney, when acting as a settlement agent, only performs a certain set of due diligence on the property that is expected to identify about 95% of the problems with the title work. In case it's not obvious, it is essentially impossible to resolve all doubt to zero on title work. To even get it to 99% would take an astronomical amount of time and cost buyers a corresponding amount of money. In comes title insurance, which says do this certain scope of review, which covers 95% of the problems and will ensure not only the work that you, the title company or attorney, did, but will cover the other 5% too, with some exceptions. However, when you transfer your real estate to an LLC, you could inadvertently terminate your existing title insurance policy. If you have an Alta policy issued on the policy forms post-2006 through the date of this video, there are generally two types of policies issued: standard policies and enhanced policies. Each allows you to make a very limited number of transfers and not terminate your policy, and the types of transfers for each are quite different. You really need to discuss your potential transfer with the party who issued your title policy to determine whether and to what extent the policy will terminate. Or you could have whoever is doing the deed transfer for you now do a new title search, and you could purchase a new title policy from this new title company or attorney. The sixth key concept is the dreaded due on sale clause. For those of you not in the know, virtually every mortgage contains a provision that states if you transfer the property to any other party, the lender has the right to call the note due. The Garn-St. Germain Act did create some exemptions to this clause, but they are generally for transfers to estate planning trusts where the beneficiary and the use of the properties will stay the same, adding a spouse to the deed, and a few other limited situations that are not useful here. Therefore, if you transfer your property to an LLC and you have a mortgage on your property, your lender could call the note due. I've not performed any kind of formal study on this issue, but I think if you ask around to people in the real estate world and look on the internet, you will find that it appears very few of these transfers to an LLC result in a lender calling the note due. Remember, the lender has a right to call the note due. It does not have an obligation to call the note due. Having said that, if you're going to do this kind of transfer, you need to understand that there is a risk that you could be one of the few that has their note called due, or that lender policies change in the future and lenders get proactive in calling notes due. I suppose if too many people lock in at these extremely low interest rates and interest rates go up down the road, lenders could start looking for reasons to get some of these ultra low interest rate loans off their books, and calling these notes due could be an avenue to do that. I hope you've enjoyed this episode on transferring property to an LLC. We have many more videos on real estate and LLC topics, so please check them out. And please kindly don't forget to hit those like and subscribe buttons so we can keep bringing you valuable and profitable content. With that said, thanks for watching, and I'll see you next time.